Well, I think a lot about the Porsche AG IPO, like Visa going public back in 2008, right? Really ugly markets you're coming into. In Visa's case, they did it early in the year, and obviously things got worse throughout that year. But I pointed out because, like Visa, this is a higher ROE business compared to most car companies. They make a lot of money on their brand. And to take you back to that instance, Visa went from 3 times book in an ugly market to now they trade at 10 times book. So that's what we're really interested to kind of look at what Porsche AG produces as they continue to report going forward in the return on equity. I think a lot of the street's looking at like about a 25% return on equity from what we've seen from some of the initial numbers pre-IPO. And that's what we're really interested in is what book multiple we're paying for this great brand. On the flip side, we've been longer term owners on Volkswagen, on the Prefs, as well as the Porsche SE. And I think that's where you can buy, the Porsche AG IPO the cheapest, at least in the interim.
Do you think that this business can withstand a global recession, Cole?
Yeah, it's a wonderful question. Car companies get into trouble when they overproduce cars. That's the history of bad car markets for these companies. Chips and the supply chain problems guarantee one thing: you can't produce enough cars. If you walk into most dealers globally right now and you ask for a new car, they'll say, great, get on the wait list. For example, Range Rovers, it's 2 years here in the United States of America for a premium car like that. So I think that's the best part of this. Now, to your point, Jeff, people are very fearful of the next 6 to 12 months. There's just no question about that. So use what Druckenmiller was just saying ago versus what Ken Griffin said, on the same day. Ken said that using the U.S., that the consumer was strong, the economy looked great. It's going to be tough for the Fed to kind of break that. So there's just a lot of disagreement in what's going on in the macroeconomics right now. But in the interim, using what's going on today, people would look at what's going on in Volkswagen and Porsche SE and say, well, what the hell's happening? And, in the situation, it could be just people selling those stocks to go out and buy Porsche because that's not going off with a bang like people probably hoped.
Cole, I was going to ask you something else, but I just what you and Jeff were talking about. Good morning to you, my friend, by the way. People just throw away the keys sometimes when they can't make the payments on a house, on a car, what have you. Why don't they, do you think people are just going to throw away the deposits for those 2-year waiting lists for those very expensive Range Rovers?
Well, they're refundable. That's the funny part. I don't think you actually got to pay for it, Steve, till like the last 6 months of crunch time. But let me give you an example of the lunacy going on in markets, and I'll use an example in your market that we own a part of. But IWG does 40% of their business in the United States. So you think a business like that, as the pound declines, would actually kind of benefit from how well diversified its revenues are, and you'll see it's being treated like the rest of the property stocks. It's just going straight down. While Mark Dixon, its large shareholder, was a buyer yesterday in the open market for a little over £1 million. So I don't think, I think people are trying to look and say, well, what's the market telling us? And the market doesn't teach you anything. You let it serve you or not. And I think we're going to find that everyone in general is losing money in the interim. The question is who's going to make great money out of these circumstances, and that's what we're pretty excited about.